how the fintech industry is emerging, and fintech is not an experiment anymore. It has really become mainstream. On this note, ladies and gentlemen, it's time to set the context for our next set of panel members and the topic they will be addressing. The topic of our next panel discussion is Rethinking Insurance with Embedded Insurance in a Digital First World. Ladies and gentlemen, embedded insurance has become a hot topic for many in the industry, including insurers, emerging insurtechs, and venture capital firms. According to a report by Instech London, the embedded insurance market is forecast to grow to 722 billion in gross written premium by 2030, more than 6 times its current size. Put simply, embedded insurance is bundling of coverage or protections within the purchase of third-party product or service at a part of customer journey. And many of the people, including insurtechs, venture capital firms, see a potential high margin and a promising growth revenue generator. Now, to throw light on different facets of this very relevant and compelling topic, called as Rethinking Insurance with Embedded Insurance in a Digital First World, I'd like to call on stage our revered set of panel members and speakers, beginning with our moderator, Mr. Chiranth Patil, co-founder and director, Riskcovry. Can we give him a huge round of applause, ladies and gentlemen? And joining him on stage are our set of illustrious speakers, beginning with Mr. Arijit Chakraborty, Managing Director of Asia Pacific at Cover Genius. Following him on stage will be Mr. Rajat Sharma, Chief Revenue Officer at InsureMO. And we also have with us Dr. Vijay, S. Senior Vice President and Group CMO, Medi Assist. We also have Mr. Subhrajit Mukhopadhyay, Executive Director at Edelweiss Tokio Life Insurance, and Mayank Ravi, SVP and Head Group and Embedded Business, Aegon Life Insurance. So on this note, this is our illustrious set of panel members and moderator. Over to you, Chiranth. Chiranth, just one request. Sorry, I'm so sorry. Chiranth, just one request is ensure that your Q&A is also getting covered in those 15 minutes. So you can bifurcate it. Yeah, 5-0. Yeah.
All right. Quick mic check. Cool.
Hi.
Hello.
Yep. Yeah, hello.
I can hear myself.
All right. So, embedded insurance, the hot new topic in everything insurance. Let's talk about that. So, first of all, thanks everyone for making the time. Thank you to GFF. Thank you to all the organization and the committees behind it for giving us this opportunity to talk about something very exciting and close to all of our hearts. We all come from different factions of the insurance community. Some of us are insurers, some of us are technology enablers, some of us are third-party digital sort of players, etc., etc. So the idea would be to cover and get as many sort of broad views and engage in a meaningful kind of a discussion and a debate. We'll try and bring the flow out to the extent possible. We'll also open it up for a little bit of an Q&A based on sort of the organizer's recommendation for the last 10 minutes. Sort of I'll try and do that as well. But the best way to think about sort of embedded insurance is a topic that is fairly new, fairly nuanced from a buzzword perspective, say a couple of years. And what we would like to do is today we'll talk a little bit about the current state of where embedded insurance is and where it is going to go over the next few years. So let me tee this off, right? So embedded insurance, there's two schools of thought as far as embedded insurance as a space itself is. One school of thought is that it is nothing new. This always existed. We just call it under something called as affinity back in the day, where it was actually just basically introducing insurance products on the back of sales of other products or services. For example, like OEM, sort of motor sales, like motor premium getting bundled at the point of new vehicle purchase, issuing sort of insurance on the back of credit, etc., etc. This always existed. So it's a very product attachment view. The second view is that it is a very consumer experience view, right? That insurance is getting sort of micro, it is getting sachetized, it is bringing insurance to the point of trust. So new kind of experiences are being created for consumers across the board, and technology is enabling it, right? Getting more personalized, getting more sort of nuanced in terms of pricing, etc., etc. And it is allowing whole host of distribution outside of just OEMs and banks. So that is the second school of thought. So I would love to go around this particular panel and get a sense of two things. One is where do you sort of fall as far as your school of thought is concerned? Is this something that has been around, or is this something net new? Right, and sort of how do you kind of define that as far as your organization? So precede that, so maybe you can sort of also, guys, speak about sort of your own organization very quickly and how it relates to embedded insurance. So three things, I guess. Yourself and what your organization does as far as embedded insurance is concerned. Second is where do you fall in terms of the school of thought, and third is the so what, right? So how do you kind of define it? What is the so what from your perspective? So I guess we'll go from the left to right. So perhaps Mayank, you can go.
Yeah, thanks, Sharon. Mayank, I represent Aegon Life. I lead growth and partnership for Aegon. Now, growth itself is a typical word, if you see, quite unheard of in insurance industry, because whom are we partnering with? We are partnering with non-traditional players who core business is not selling insurance only. So, can I complement to their product? That's what growth for us, and this is what we are trying to do here.
Thanks. My name is Rajat. I'm from InsureMO. Again, we are an insurance infrastructure platform. So whether we've heard embedded now or we've been seeing that forever, my answer is we've been seeing that forever. The only thing that we have seen now is the amount of use cases and the amount of products which is kind of erupted in, right? Now, the only reason for that is probably earlier carriers used to talk about it, or banks used to talk about it, or a few selected companies used to talk about it. Today, if you go to a utilities company, a power company, an auto dealer, an auto manufacturer, a fintech, everybody wants to talk about insurance. And when their side of the view comes to the table, that is where the innovation, becomes exponential. I think that is the only difference that we've seen today in terms of the number of use cases that these channels are driving, more than carriers driving that amount of embedded. So yes, there is both schools of thought, and I think both are correct from our perspective.
Cool. Arijit?
Thanks. I'm Arijit. I'm the managing director APAC for Cover Genius. We consider ourselves as a global leading embedded insurtech. And what we do is in a single API, which is multiple markets, multiple product, we come up with very hyper relevant insurance solutions in the same consumer journey with large tech companies and e-commerces. So example, take Booking Holdings, Skyscanner, Agoda. If you're buying any air ticket, flight tickets, we are at the embedded one checkbox insurance to buy protection against a product. If you are in large e-commerces, for example, Amazon, Flipkart, eBay, we are again giving you protection against a primary product you are buying. Suppose a laptop or a smartphone, we are giving you protection against that. Now, given to the question, I feel that embedded insurance has been there as a product bundling and going to the affinity. I think what has evolved is what our company is also obsessed about is a consumer journey and how it is sold and being distributed. Like we are pretty obsessed about the NPS score, which is record keeping like positive 65 to 70, what we have globally, and how the consumer journey happens. Because we co-create products from our distribution partners. We do the end-to-end APIs. We work on the claims journey, payments journey, and then we give the innovative product to the partner, which is bespoke. Compared to previously, I think the affinity model was more about creating products and then finding distribution partners. We are more distribution focused and then finding out solutions which works for the B2B2C customers.
Thank you so much, Arijit.
Hi, I'm Dr. Vijay. I am the Chief Medical Officer at Medi. So, Medi is one of the leading third-party administrators in the insurance space. So, yeah, that's about it. And on the question of embedded insurance, I come from an insurance background. So, what I would say is that embedded insurance has been around for quite some time. So, as rightly pointed out, it's something we used to call as attachment product or affinity product. But now, with the digital age coming in, true embedded insurance is coming into space. So embedded insurance is not only about making products and selling them on platforms. So that is one part of it. The true experience of an embedded insurance comes when the entire journey for the customer is seamless. So that's where we come in. We provide digital experience on the claim side as well. So the entire life cycle of the policy servicing and the policy sales and servicing encompasses digital insurance. That's the experience in the global space which defines it. That's all.
So, Dr. Ravi, sorry, Dr. Vijay, I apologize. So, since you have been you have been in the insurer side, and then with Medi Assist, that is more of a digital TPA, if I can say so. You have seen both sides of the coin, at the point of distribution, so underwriting point of distribution, and then post distribution support. What do you think characterizes embedded insurance differently from any of the other products that you have traditional products like retail products? Like, what does it mean for you from a Medi Assist perspective?
So yeah, I absolutely agree. That's a good question, Chiranth. So see, from an insurer's perspective, embedded insurance is very different from the traditional insurance. So traditional insurance is where a product is made. It has all the features and it is just sold to the customers as such, and they don't have a choice on choosing the benefits. Whereas the insurance industry in the last couple of years has changed. We underwrite products, we pre-underwrite products, that is the prices are fixed and the benefits are very flexible. So take an example of somebody going to a Flipkart and trying to make a purchase of a mobile phone. So at that point of sale, so there is an insurance product, say a personal accident or a hospicash product, which is sold along with it by the insurer. Uh, the advantage for the insurer is that there is no operational hassle. Even the customer has the same benefit. So on the same platform, through the same payment gateway, he gets the product. So that's what is on the insurance side. So the reach that the insurer has at a low cost is the big benefit that he has. Whereas if you see from the customer, so talking from the servicing side, I would say that at Medias, so say today we service around 10 million customers through Ola and Make My Trip at Medias. So the seamless journey that they get, so the claims come in digitally. They are able to submit claims through WhatsApp, and the real-time updates that they get. So that seamless journey is what helps them to have a great experience of insurance at the end. So if you see what does a person want from insurance, he pays for it, and at the end of this day, the claims is what uh,
That's the
what
moment of
defines
truth.
you. Yeah,
It says,
exactly,
they say claims is the moment of truth, right?
absolutely.
So if you think about it, I think Dr. Vijay makes a great point. Embedded insurance, from a insurer perspective, it's about sort of getting these pre-underwritten products, micro products, and distributed at scale at a very low cost, which means that there is a lot of data throughput also coming on the back of the business volumes and all of that, which makes underwriting more efficient. On the distribution side, it is about sort of really taking these products at scale and being able to sell more with a whole lot of lesser amount of operational hassles. And the consumption side is easier because you understand these products that much more easier. The affordability is there, accessibility is there, and awareness is also there. So it's easier for insurance products to get sold, a traditionally push-based product to be sold. So that's what is sort of tying it all together. So Arijit, coming back to you, I mean, you guys are doing sort of some interesting embedded insurance use cases at scale across the globe, right? So what stands out? Like, what would be your one or two sort of favorite use cases? It doesn't need to be in India, but what are your top two or three different, say, use cases that you see having played out at scale, and why do you think those are relevant for the future as well?
Sure. Thanks for that. I think how we operate in 60 plus countries, right? And we come up with, again, hyper relevant products, which is distribution focused. Now, I'll give you some use cases which we have recently worked on. So there's a global partnerships which we have done with a fintech player called ZipPay. So ZipPay is a leading payment gateway, payment wallets. And what we have done with them is whenever you are using a Zip as a checkout option, our algorithm can then verify that what are the items which are insurable. And then based on that, at the checkout option, you can have a protection against that particular product at the checkout. And if you don't want to convert at the time of checkout, you don't want to buy, again, post purchase, we can also prompt you to buy in the first 30 days. Now, if you see this model, it can be replicated across any fintech, any payment gateway wallets across the globe. And we started with Zip, and it's a very successful
And this assumes,
partnership
sorry
which
to
we
cut
have
you,
done.
but this
Sure.
assumes that Zip has been able to identify the categorization of the purchase.
So generally, if you so Zip to some extent does, but most of the payment gateways are not able to categorize like what item you have bought, but they have the information that what merchant or merchant code they have. So from that merchant code, we know that it's a OTA or it's a fintech or if it's a retailer or it's an online e-commerce, and then from there we can then push a particular travel insurance or retail insurance at the back of the merchant code, right?
Very
So
interesting.
yeah, so that's one use case which we have recently done. Other one examples, I'll give it of Ola in international markets. I see my partner in Ola sitting in the room as well.
I think he's a partner for many of us here.
So what we have done is why this product, what we did in international markets with Ola is interesting because I compare this product with where I come from in Singapore with Grab. Now, what Grab has done with Zongan and Chubb is only when you are doing a ride, it protects you against death and disability while you are in the cab ride. Now, we all know that what is the amount of claims you'll get out of that, like hardly anything, right? But we curated a product for Ola which covers things like when there is a delay in your cab ride, we pay a $10 voucher. If you take the cab on time, but you are still, because of traffic, you can't make it to the airport, we actually pay for the flight. If you lose your personal belongings, we pay for the personal belongings. Even though you retrieve the personal belongings, we also pay an inconvenience fee. So this is all packaged as one-time opt-in, and it goes auto-debited for every ride. So that we have seen a lot of traction of that. And similarly with the whole, the whole COVID situation and the whole travel, this thing, everyone has a conventional travel, but we came up with like products like cancellation for any reason, products like parametric flight delay. And then if you go to any OTA, you see a fixed pricing, flexible pricing. That we are distributing, the flexible pricing is actually our product. So what has happened in embedded insurance, which we were all talking about, convenience. So insurance, we never wake up in the morning and say, let's go and buy insurance. But how embedded has changed is when you are buying a hotel ticket, you will buy a flexible pricing because you want that flexibility. But in your mind, you don't think you're buying insurance, but that's actually an insurance product. So we are moving from insurance selling to insurance adoption, which is making the whole embedded journey more interesting. And that's why it's kind of disrupting the distribution of insurance.
Very interesting use cases, Arijit. Thank you for that. Rajat, moving over to you, I guess as building on to what the other two gentlemen mentioned, you are an infra company, you're building the rails, and then you can make anything sit on top of that. You can make underwriting sit on top of that, distribution sit on top of that, etc., etc. Some you do it yourself, some you kind of have a system implementation partner. We're exchanging notes about that. Very interesting model, and you've done it at scale, right? And you're talking about some partners like IRCTC and others where you're doing more than 1 million sort of policies per day. Now, what does embedded mean to you in the context of building an infrastructure company, right? Because you're not really acquiring for the cases of embedded only.
Yeah.
Embedded becomes a use case on your platform, in a way. In a way. So how do you think about embedded?
So yeah, that is where the hype has to be cut out. Now there is obviously hype, right? When you talk about something new, there's this big hype. But the fact is now, if you look at insurance industry, let's come to the core of carriers, right? Now people say that embedded will be $3 trillion in business in 2030, right? That's what we've been hearing. And currently, if you look at the total GWP premiums of global is around $7 trillion. Now, embedded versus a traditional product, the biggest differentiation that we see is it is not to be run just the way our traditional products have been run. The way we look at it is there are three very important parameters. We call it the three V's. Volume, variation, and velocity. Until the time these three are not there, an embedded product should not be existing in a scenario. Now, the reason for that is a unit metrics or unit economics, when you apply from a traditional product to a bite-sized product, that immediately fails. The reason for that is, if you're selling a traditional life insurance policy for 50,000 rupees, right? And if you're selling the same bite size or embedded for 50 rupees, you can't apply the same metrics which is required to build a product on the traditional side, and same for the embedded, right? So that is where the biggest differentiation comes is, can people go and reuse as much as stuff on the embedded? Can there be infrastructure component that can reduce your cost to zero of launching these embedded products, right? And there's obviously not profitability. I have not heard of any company which are very profitable doing embedded products. I'll give you an example.
Arjit, would you agree with that?
Not
Embedded
really.
insurance is
We
not
have a very
profitable.
healthy margin globally on embedded.
So maybe Rajat, you're talking about more about it from an India perspective.
No, I'm talking global. Now,
Okay.
I'll give you an example. So last year we did around 65 million policies in 24 hours. 65 million policies number, not the GWP, the number of 65 million policies. The same day, we wrote around 500,000 policies for the traditional type of products, which are big ticket, motor, a fleet, travel, that kind of products. The profitability, the losses that you make doing embedded products gets covered by the profits that you make from an embedded, from a traditional product, right? And that is where we see that, yes, calling it 65 million policies, that sounds very sexy, right? That sounds very cool. But the fact is, making money out of them is one very difficult, because those 65 million policies are getting issued from, say, 100 channels. Now, you have to consider the cost of connecting to those channels. You have to consider the cost of doing, those 65 million policies would have come from, say, 1,000 products. We call them SKUs. A motor insurance product might have 100 SKUs for that. Now, that is where the doing and building those products, and you also know it because you're also trying to do the same thing, right? Now, building those products and getting them to the market, there is manpower, there's labor, there's tech cost, everything involved. Now, if you can bring it down to zero, yes, that is when it makes sense of doing stuff. And now why Cover Genius is successful is because they're very focused.
Yeah.
Right? If you ask Cover Genius or anybody else, can you do 3,000 products and make it profitable? No. I don't think so. Yeah. Now we do the same thing, right? So we write $20 billion every year on the platform. And every year we are growing almost 40%. Out of that $20 billion, 90% still comes from the GWP, comes from the traditional. Whereas the volumes, 80% comes from the bite size. So that is where the numbers and the metrics show, because we run the infrastructure and we try to visualize every scenario.
That's a key point. Embedded insurance can be a loss leader product if you're not focusing on it. Incredibly high volumes, incredibly low margins. To sustain that as a business model means that you are going deep in it, as against that being one of the. So that's a fair point. So I'd like to bring in sort of Mayank here. And Mayank, we've been talking a little bit from sort of the distribution side. We're talking about in terms of post-distribution support. What do you think from an insurer? How do you guys think about embedded insurance? Is this something that is, again, something that has been around and you just had to add more color to it via APIs and sort of, all the sexiness that comes with making a product micro and those kind of things? Or is it something that you think is going to be a long tail, sustainable sort of a business model for you guys as well? How seriously are you guys taking embedded in the context of maybe life insurance, but also if you have seen your counterparts on the non-life side, how do they see embedded? It will be great to hear both sides, please.
We see great value in embedded. If you're looking at the protection gap in India, is close to 70%. So it's all about matching the demand supply. And so the way insurance is sold and the way people, so it's like an old saying that insurance is never bought, you sell that, right? But now I think we need to change that approach, right? So can I make it simple for customers? Can I make it very, very simple? It's not about just a product, just a distributor. It's about simplicity, the journey that I'm having for a product. Maybe underwriting for that matter. For example, for our organization, underwriter is not a human being. For us, it's just an algorithm. So we are trying to make it very, very simple for people, quick decision. There are no lags. And this is how we think that we can make a lot of difference. Now, because a lot of people who are not exposed to insurance, right? And there's hardly any, and so if I make it very simple, at least I can make people familiar to insurance, at least life insurance. And this, I think, embedded will play a great role, because what we are doing is attaching with the primary product. That can be a travel platform, can be a lender, can be a health platform. So they're already enjoying the benefits of that particular platform. And why not insurance along with that? And at what cost? Hardly any. But yes, as you rightly mentioned, it's all about volume. This needs good volume to manage. So if you have a small volume, of course, I will say that yes, it's a bit tricky. But if the volumes are high and if you're able to write, lives well there, I don't see a concern. This will really help at least cover that protection gap that we have in India. And we are quite serious about it.
You mentioned cost, you mentioned margins.
Yeah.
Let's talk about deeper economics on that side. So what is the cost of, how do you see underwriting as it relates to embedded insurance products relative to other traditional, more configurable products? what does that economics? Can you walk us through that? Like, how does that, how does that work out for an insurer?
For an insurer, underwriting, you say, so it's like fluidless underwriting for me because the sum at risk is not very high. In embedded, I will not be giving a very high sum assured because this is not a primary product and it's not a long-term product. It's going to be a short-term product because the person is buying something else and I am attaching insurance to that. So it's going to be a small ticket size just to make the person familiar with insurance, and then of course we can add many more things. So of course the margins are not going to be very, very high. But what happens because the way we are selling that through partnership model, there your margins will not be so. At least I can save on the cost. At least my underwriting cost, my the demand supply, the match that I was talking about. These things are well taken care of. I use technology there. But yes, if I go for human intervention, if we have a brick and mortar model, no, it's not going to be sustainable.
Can I butt in here?
Absolutely.
Sure,
So yeah, he's right. In a way, embedded insurance is where we sell to the masses, right? So large numbers and small incidents. So that works out. So the pricing is also on the lower side. So to take an example, I would say our masses lies in the hinterland today, right? It's very difficult for the insurance company to reach the hinterland because of the operational cost it requires. But if you go about bundling or embedding an insurance into a micro finance with a microfinance company, if you embed it with a loan, right, it reaches a mass. So you are giving insurance to a large population. The sum assured is low, and your incidence even in that large population is low. So it remains almost the same. So around 8 to 10% is the incidence rate, right? But your ticket size goes down. So you are able to sell that insurance and still make some money out of it. So that's how embedded insurance works in a way.
And as far as assistance support, just a second, Arijit. So as far as your assistance support that you provide, post distribution on the claim side, etc. Do you monetize on embedded as well, or for you is it a loss leader kind of a product category as well? Like, how do you think about economics from your side?
So no, everything on the embedded side, the good thing is that most of these have to be digitized, right?
Yeah.
So you cannot have a paper coming in. You cannot process it on a paper. That will be a huge cost. So here what happens is technology supports us. So things come in digitally. So there are claim engines which are built in where automation has been high. So auto approval of claims happens. So the cost of processing even at the back end has gone down. So that helps us in a big way. So it is never a loss-making proposition for either the service provider or the insurer at the end of the day.
Good to hear that it is actually a sustainable,
Yeah, absolutely. It's
channel across the
a
board.
sustainable model. Yeah.
But you need
Arijit,
to
you had a
rethink
point.
everything actually.
I think Arijit had a point, and we'll come back to you if that's okay.
It was more on the reaction to the margin conversation because that's pretty interesting.
Yeah.
And I agree that it has to be end-to-end digital interface. I have seen before as well that there are insurtechs out of India, Southeast Asia, and other parts of the world. They call it digital, but it's kind of a digital interface. But behind it's all human moving around, like we call it lipstick on a pig, sort of a scenario. So if you're creating a business like that, obviously that's not, you can't make margins out of that. Now, what we do in Cover Genius is, our differentiation is we do a lot of product recommendation, dynamic products, and dynamic pricing. So that actually dictates the price, the margins, because there are instances where your program, you haven't priced it properly or the incidence rates are higher and it's moving towards a loss-making proposition. Then what we do is we have dedicated account managers for every account. We look at what are the guardrails? Do we need to change any product modification? Do we need to do any pricing modification? Do we need to do anything which is changes in the solutioning or how the consumer is buying and claiming the product? So there are a lot of things which you can factor in, which doesn't need to change the pricing per se.
Yeah.
But you can make changes in the consumer journeys and product solutioning so that you can then manage your margins and the losses out of that.
Right.
But if you're working like I also come from in the past, a traditional insurance background, a lot of people just will give a static pricing and on 6 months, they will look at how your portfolio is working, whether it is red or green, That doesn't work. In an embedded, you need to work very, very closely with your partner, and you have to have skin in the game and grow that account together.
Yeah, that's a very good point. And Mayank, I'll come back to you in a sec. But just to kind of juxtapose what Arijit mentioned relative to our own experience at Riskcovry, more than 70% of our volumes are actually embedded insurance right now. And we see ourselves as market leaders on the credit attachment insurance side. We have visibility into capturing about 20% of the home finance market by the end of this fiscal year. So, and that point is absolutely right. It is about how deep you are entrenched as far as your brand partner or your distribution partner, and providing that entire end-to-end support for it to be a high margin kind of a business. So if you're going to be providing just the API, right, then you can, very seldomly will you see getting into double digit percentages in terms of margins. But if you're going through the full stack, you're providing the product, the solution, you're working with the underwriter, bringing the sort of the solution to the table, APIzing that, providing sort of the other distribution support post that, then we are seeing sort of, more than 15-20% plus margins as well for certain kind of use cases. So it's a extremely lucrative kind of a business model, but it is few and far between because not everybody can distribute insurance at scale. So coming back again to Mayank, now we are again talking about it from a distribution perspective and all of that, but as far as life itself, right, what life product will you embed at the end of the day, other than sort of attaching it against sort of attaching credit life, right, against credit? So what, are you guys seeing any product innovation there on the life
of
side?
course, it's very much important because you need to co-create products with partners.
Okay.
So you definitely is important, and then lending is one. Second is health platform. You can attach with multiple things. So health is, I think, is a good case. Used case here. We have education is a good use case. So there are multiple areas where you can work. It's just not lender. So people always think that attachment is always about a lender, what a relationship. No, it's not. That's not the case. You need to innovate, and you need to make products simple with no legalish kind of words, very simple things, not to be terms and conditions, and things will work out. If I try to sell the same product that we have today in a retail space and try to embed, no, it's going to work. Not at all. So we have to co-create depending on the partner's requirement, depending on the target segment they're catering to. And we are quite hopeful that this is going to really work in India.
And what is the typical turnaround time for you to create a new embedded product? Let's take two examples, two use cases. One is you're creating a new embedded product from scratch.
Yes.
You have to file that with the IRDA, blah, 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 all of that you have to go through. Or second, you're taking a larger, more configurable product and sort of, making it more micro by extracting the right kind of sort of, a composition of that particular product and pricing it out separately. So what would be your turnaround time across both of this and the economics thereof, if you don't mind, please?
Well, preferably configurable products,
okay,
where I can design multiple propositions for a partner.
Okay.
So the product needs to be flexible enough to allow me to do so. Also, thanks to IRDA, now we have use and file in India.
Yeah.
So this is going to be a great help for companies
that's
who
a
are really
great
trying to
tailwind
innovate.
for the space, yeah.
So I don't think so economics here. I don't think is so. So you look at a turnaround time here for any proposition to build. If I already have a product that's flexible enough, should not take more than a week. And then, of course, understanding the requirement, tech stack. We already have a tech stack, one single API. So we can do everything, right? From onboarding to claim settlement, everything can be taken care of. So it's a 1 week job, of course, depending on the bandwidth at the end.
Yeah. I mean, insurers to talk about turnaround times in weeks itself is a big thing. So, kudos for that journey and sort of having sort of interacted with yourself and some team members as well. Very progressive sort of, tech stacks as well. So, great journey on that front. Rajat, but is that what you're seeing as well? Because you work across insurers, right? You work with sort of, in India, outside of India. So, what do you see as a technology challenge to enable your insurers to create embedded solutions at scale?
So same thing. So in fact, when Aegon started their journey with InsureMO, this was almost, I think, 4 years back. The same issue of legacy, same issue of traditional core back-end heavy system. And I think what Aegon's vision was to build a more futuristic organization which is more distributed, in a sense that, your one system should not be impacted by another system, right? And that is where co-creating new products, bringing that time from 6 months to 1 week, or even for that matter, we don't even say 1 week. From our perspective, those products are ready. You can pick up an SKU, change your rules and your ratings, and your APIs are ready, which you could give it to your apps, or you could build your own apps with a low-code, no-code player as well. So I think this is a similar scenario with most of the carriers. When we started off 7 years back, it was very difficult for us to go and talk to a carrier. saying that, look, here's a microservices architecture, here's platform, you can get your products, you can get your APIs, and we were like, this is bullshit. This never happens in carrier insurance company. This process, we have to build applications. How will you do that? But today, I think we just cut from that to this date, and we have now 300 carriers who are working with us, and I'm not just talking of a single API. They are building stuff on the infrastructure, and they don't have to go and replace their existing core systems. Let them be there. We don't even educate, going to replace core system. We rather try to reduce that to be system of records. They are good, they're stable, they're already doing their job to fulfill the internal users, underwriters, actuarials, all of that stuff. These core systems are not meant for customers and partners.
Right.
They were never meant for it. Earlier it was just banks and agents, but today it's not like that, right? Today it's 200 channels that they need to connect to. And out of the 200 channels, only 2 will fire for them, right? So if you were to do the same amount of money of connecting 200 channels with 100K for every of them, that's not going to make sense. So that is where reducing that cost of connectivity to zero, doing that innovation of launching any new product to zero, that is very important. And that is where that 1 week of lead time, and that I think they're doing a great job. And when you're talking to a regulator and even filing it and going live within 1 week, that's immense speed. But even if you could do it in less than a month's time, that is commendable because your tech cost becomes near to zero. And if we used to look at it like a analog and digital scenario. So it's very interesting. When you look at I read a report from McKinsey which was 15 years backdated, and then they used to look at the stack and they used to draw down what the tech cost in. They were trying to analyze the cost to income ratios of most of the large global carriers. And in a cost, tech and people and process, that covers 90% of your cost. Now that coming from analog to a digital completely changes the game. If your tech becomes whatever that was from 1/10, your processes obviously is getting cut down because of the simplicity in the product itself. The amount of money that you are spending on tech goes to marketing and goes to commissions that you are paying to your agents and your partners. Despite that, your savings are huge, and that is where the profitability comes when you're doing these kind of products.
So when you work with your 300 plus insurers who have legacy core systems and those kind of things, these legacy systems were not even born in an era where embedded insurance happened at scale, right? Or even being discussed about. So what are the challenges that you feel are pertinent in this particular space as it relates to you connecting with those core insurance systems? Is there sort of anxiety? Is there sort of discomfort in them to opening it up to sort of platform players like yourselves? I mean, not just in the context of embedded insurance, but perhaps more so because of for new product creation, right? Because they thrive on a new product creation being a change request, as against that being done on the fly versus via low-code, no-code platforms, etc., etc. We are also experimenting on that side in advanced conversation with a few insurers to use our distribution tech and make it sit on top of like core insurance systems. The challenge that we feel is that people look at it from a cannibalization perspective as well, which is not really. So it has to be pushed from the insurer to say that guys, work with them. Right? If not, we are going to probably stop working with you guys as well. So do you see that across insurers, and sort of how do you contextualize that with embedded insurance product creation?
Yeah, big time. So as I said, right, so because we even work with RPG, AS400 green screens. So forget APIs, you can't even do anything with them. Even if you have to write Hello World, it takes 2 days to write Hello World. We all come from a programming background, but that does not work in today's scenario. But what we do is we try to kind of work with them, because we have two models. One, we work either in a two-speed model, in a two-speed architecture model, or we try to create a parallel ecosystem with their existing core system. So both the models are equally popular with us. The other thing that we are doing is, because since we are an insurance infrastructure platform, we are investing very heavily to go and connect with as many core systems as possible. Now that is a burn on our side. That is the investment that we have been doing, and we've been burning hundreds of millions of dollars only to ensure that we are connected with every single core system provider in the world. Now, if you pick up the 5 largest core system providers in the world, if you go and just go and integrate with them, that means you've captured more than 80% of the market. So between Guidewire or eBauTech, or Duck Creek or Aegis or any of them, if you build connectors to them, and you've understood their data models and how that data model could be translated to your data model, I think you've kind of solved a big problem for them. So that is what we are doing very, very proactively. Our R&D teams are working very heavily to go and connect with them. But again, it's not that easy, because these data models, are a spaghetti in itself. Everybody's taken a core system and they've created their own version of their core systems. So eventually, if we're talking of 5, we eventually see 500 of those versions. But yes, I think two-speed model is very famous, and in fact, what you are doing is probably one of those most effective models. You bring a distribution and then try and bring APIs, and then probably push bad jobs, or let them consume the APIs. We do see that as well, but I think parallelly doing that and then reducing that core system to a system of records, that has come up with very heavy architecturally mature organizations. People like Aegon, what they did, because they were very, very heavy architecturally mature.
Yeah.
They could take a decision that yes, this is possible, and we could reduce it to a system of records, and we could create a layer on top of a middleware to drive this kind of an innovation. And this is what Aegis is doing with us globally. In 40 countries, we are doing the same thing with Chubb. We're doing the same thing with AXA. So these are all big, large organizations who've taken that call. After 50, 60 years of struggling with these spaghetti, and they can't replace it. Data migration is like, it's like a brain surgery. You don't do it.
Fantastic scale there. Arijit, just to bring you in, so by definition, embedded insurance at scale works when you are deeply entrenched, not just on the distribution side, but also on the underwriting side, right? So to carry forward what sort of, Rajat was saying, that you do need that, capability to being fairly entrenched into the insurer side systems as well. So how have you gone about that journey, if at all, and any use cases to talk about where that has been a challenge and how it has overcome in recent times?
Sure. So what we don't do as a strategy is take like a Bharti AXA product and put it to a distribution partner, or take any other ICICI Lombard and put it globally. I'm giving Indian examples here. But we don't do that because, again, we co-create products with distribution partners. So all product, if one product is available with, suppose Agoda, my Skyscanner product will not be the same. It's actually a different product. So we co-create with distribution partners. We do our in-house underwriting, actuarial modeling, coming up with a product, APIs. We write our own terms and conditions. The entire insurance value chain stays on our Xcover platform. Then we bring that's the point when then we bring the risk to the capacity providers, whether it's global reinsurers or direct underwriters.
And that's with an MGA model?
That's mainly. So we are an MGA globally, but as you know, MGA as a concept doesn't exist in Asia, but we pretty much work still as an MGA. So what we do is we bring the risk to the direct partners or the reinsurers, generally with reinsurance, because most of our dealings or most of our partners are either regional or global. Okay. So we bring it to the reinsurers and insurers, and then we see what capacity they can provide. At the back, actually, we also have our global reinsurance license. We have a captive insurance license. So if need be, we co-share the risk at the back end. And again, depends on what kind of a product which we are distributing, right? If it's an insurance product, I obviously need a fronting insurer and a reinsurer to give the capacity. Right. But if I'm selling something which is like a service warranty or a product warranty, then I can also package it in a way and take it under my own balance sheet through the global reinsurance, because
those are assurance products, not insurance products.
Exactly. So the thing is, I completely agree that sometimes if you are not the manufacturer yourself, if you do not dictate the product construct and the pricing, you cannot innovate. Then you are still dependent, like whatever innovation you have done on distribution, you're still dependent on manufacturers. So somewhere you need to keep a balance so that you can innovate on that and then come up with the relevant product.
So it makes a lot of sense for brands and distributors to have that one-stop approach where you not only bring the product and the solution, but also the technology integration and post-sales service, support as well as a one-stop shop. But sort of, to do it, but that means sort of you're doing it with, the brand will do it with one sort of provider, right?
Yeah, exactly.
In most cases, serious distributors of insurance want a multi-insurer, multi-product kind of that's the strategy. Typically, that's what we are seeing.
Yeah.
So in that particular use case, are you seeing sort of those kind of use cases here in India as well? And how do you think about that? Or are you taking a call that you're not going to go work with a lot of carriers, perhaps go up the value chain into reinsurers?
You mean like become a marketplace sort of a model?
Like, well, sort of, think about what if the Cover Genius story were to become a little bit like a Riskcovry journey. What would that mean with a multi-carrier, multi-product, multi-distribution channel support, right? Do you see value in that in sort of in markets that you're currently at?
So I think globally, what we don't want to do is, we do get a lot of interest and requests for that. Like there is a large fintech or there is a large e-commerce. They want to, and there is a lot of traffic coming to their platform. And what they want us to then build is, can you build maybe a mini policy bazaar on their platform, right? And which have 3-4 careers, and then you are distributing. But what they sort of, those distribution platforms don't understand is sometimes giving multiple choices to customers is not the best way of distributing insurance, because people end up buying whatever cheapest in terms of premium. But cheapest premium doesn't mean it's the right product construct for that particular individual, right? So we have been very focused on not to play on the marketplace model, but to create one product which is suitable for that particular platform and the consumer journey, and then evolve in that product. It doesn't mean that it's like you cannot make changes to that. We launch one product, then we experiment with that. We kind of increase the product variance or decrease product variance to make pricing affordable. There are a lot of things we can do. Like if the main product is not selling, in the next page, suppose a conventional product, travel product is not, no one didn't buy because he has it. The next page, we will push for a parametric flight delay, right? So things like that, you can evolve with those product manufacturing, but we generally stay outside standalone product. Like on the bank assurance, obviously, people ask for, there is an insurance tab, you have a laundry list of products. We generally stay out of those because we don't think those things convert. Those are not embedded. And second is, we don't play in the marketplace model where sort of people choose kind of the cheapest product.
Compare and buy mostly happens in retail products, right? You don't do that for sort of embedded products. You don't give a lot of options. It just should be consumer consent, right? You opt in, opt out, sort of, and then...
Yeah, exactly. But if we want to, we can, because our single API actually can give multiple products in multiple markets at the same time. So if you look at Booking Holdings, which is our global partner in 60 plus countries, because insurance again is territorial, right? So take bookings as an example, right? If you are originating from India, Mexico, China, Singapore, it doesn't matter. Your buying journey, claims journey remains consistent.
It's kind of a single product. You could be giving multiple products via one tunnel, API tunnel, but single product at the point of purchase.
Single product at the point of purchase. But if we want to do, again, just to complete that thing, but what take is sophisticated enough that it knows that if you are originating from India, then an Indian insurer will issue the policy through our system. If it's Singapore, it's a Singaporean insurer. So we have the global infrastructure. Now, we do a lot of bundling stuff as well. So we can bundle different services to make a product variant or a differentiation. Now, if we want, we can actually give, there's a partner we are working with, without naming them. Regulatory wise, they have to show 2 or 3 options of insurance. And if it's a regulatory requirement, we will do that.
Because it's a retail product. And
it's a retail product.
And they are
exactly.
And they have an intermediary license.
They have an intermediary license. So then we will do that.
Got it.
But as a first business proposition, we will come up with one product which works for that ecosystem.
Very interesting. So I guess a final question to Dr. Vijay before we kind of open it up for the panel for very little time that we have. Question is, I guess, how do you see integrations with insurers? Because at the end of the day, one of the 2 things that Arijit mentioned was customer experience, product nuances. And when you think about it in terms of post-sales support, right, or post-distribution support, very sort of, the extension to that would be that you have deep entrenchment with the insurers as well, right? So, and you assist across there's hospital network on one end, there are multiple providers, multiple insurers. So what does the tech system for you look like as far as, integration with insurers? Is it deep entrenchment or is it very sort of, on the fly kind of a work? Something to talk about that would be helpful in the context of embedded insurance, please.
Sure. So, yes, as a service provider, we are deeply entrenched with all our partners, basically, be it the front end, so be it the hospital infrastructure or the insurance companies itself. Because today, as a service provider, even regulation mandates that we should, each of our transactions has to be ideally approved by the insurer and payments happen through them. So we are deeply integrated with them, and there is a real-time integration which happens. So whatever transaction is happening, the customer is aware, the insurer is aware, and even the say the provider, the hospital side is also aware at the same time on real time. So we are actually deeply integrated to each of the components of the insurance space. Yeah. So yeah, it is something that is required today.
And sort of has that changed? I mean, like, the tech stacks are not really mature on the insurer side. We are few and far between, right? So different API standards, different. I mean, how does that work as a TPA, a digital TPA at scale,
So
integrating insurers related to distribution?
yep. Yes, I think we have evolved as an industry in the last few years. So we invest a lot on the digital side today. So we have specialized teams working in that. We integrate with each of the insurers. So being the challenges, being a third-party administrator, we integrate with every insurer. So there are 30 insurers in India today. So they may go up by another 10 or 20. We don't know. So yes, we have a dedicated team which works with them. We even integrate with the providers because we need to get real time data coming to into us, because on the embedded space, as I spoke, I can't rely too much on paper, right? So things have to come in a structured format to me. So I have to integrate with the hospital so that the data coming into me is relevant to my rule engines running at the back end for auto adjudications or faster processing. So we are deeply integrated, and we have invested a lot in that from the service point of view.
Interesting to hear. More power to you guys. All right, so we've got a couple of minutes on the clock, guys, and and first of all, thanks, panelists. This is very exciting. Hopefully, we brought out the best of what you guys offer in embedded insurance at large as well in this discussion. So 2 minutes on the clock. Perhaps we have two questions. So time for two questions. Maybe. Start off with one question here, the other question here as well.
Hi, my name is Sumit Swaroop. I work for Center for Digital Future. We do a lot of research on policy and regulation. That's why I'm sitting on the front. I wanted to ask the first question. But a couple of weeks ago, I was reading that Tesla is developing a system where their cars have IoT and intelligence, and the cars send real-time feedback to a central cloud. And therefore, they're developing insurance. So the insurance actually varies on a daily basis depending on how well the driver is driving the car.
Usage-based.
Usage-based. And I can imagine that, these things are also coming in India with microfinance you mentioned, and other things we've also seen with healthcare, with the pre-existing conditions and age, etc. So usage-based being linked to insurance, what kind of regulatory issues does that throw up? Data privacy? Can an auto mechanic give feedback to an insurance company as to how good the car is doing? Are there data privacy issues that we're looking at here going forward? And second question again is around regulation. As you guys raise more and more money, do you see, and technology is a big driver for your platform. So are you considering, you are a platform, and therefore are you looking at platform economics and platform issues in terms of competition, antitrust, etc.? So both data privacy as well as antitrust questions.
Whom do you want to direct the question to?
I don't know. Whoever wants to take up those questions.
I mean, these are extremely important questions. Can't be answered in the next 20 seconds.
Sure.
We'll take it offline. But telematics, pay-per-use, usage-based insurance is what we are working on a lot. There are mixed things about what kind of a data we can get from distribution partners, whether we are taking personal data or we are doing aggregated sort of a data where there is no personal information, but making the whole consumer journey better by usage base. But very interesting question. Would like to take it offline with you.
Yeah, we can discuss. In fact, Tesla works with us as well. So there is a lot of data points that we know what they are doing. A lot of it is marketing, but the fact is it happens a bit differently. But yes, I think we can discuss on a lot of that aspect.
Probably a panel by itself. And your second question was on platform economics. I'll request you to kind of take it up with the speakers, and we can happy to share our point of view on that particular bit as well. Pranshu, I don't know what question you would have that we'll answer. It should be the other way around, I guess. But it will be great to hear from you.
I also have a lot of questions for Pranshu.
So the question I have is on the dark side of embedded insurance, right? So it's very easy to get carried away. This is for a lot of, for example, fintechs. It's a new source of income, source of revenue. And because claims at this volume are easy to predict, and most of these products will have lower incidence ratios, you can put in a lot of TNCs. So at what point do you draw a line? And especially when you work with partners, some partners may just be looking at it as a new revenue opportunity, right? And as I said, it's easy to get carried away.
Hmm.
So where do you draw the line for this model to be sustainable in the long run? And how do you work on that, and how do you work on that?
Fantastic question. So basically, Pranchi, you're asking is, economically it may make sense, but is it giving,
The right value to
is
the
there
customer?
customer value?
Is there claims? Because at the end of it, that's the point of fulfillment.
Great question. Whom do you think would be appropriate?
All the partners.
Maybe
yeah.
all of us can opine. It's a very pertinent question. All of us can opine. Maybe Dr. Vijay, if we're starting with you, very quickly, please. 10
So yeah, I think you're very right. So at the point of sales, the biggest challenge with embedded insurance today is the customer getting what he wants, and does he know what he is paying for, right? So that's the first question that needs to be answered. So once that's answered, when we underwrite a product, so we keep in mind the type of losses that we can sustain, which rightly pointed out by the panel itself, was that we keep monitoring on a very regular basis. So we have built in, we understand and we know till what amount of claims can this product be sustainable, and it is monitored very closely in the embedded space. We don't do it on a quarterly or a 6-yearly period. So that keeps
real-time
the
monitoring. Dr. Vijay, you're saying real-time monitoring is perhaps
Absolutely.
one of
Yeah,
the answers.
yeah.
So maybe we can abstract the answer to the question in a few words. Arijit?
I think I agree. It's real-time monitoring, coming up with a product construct which is consumer-centric. I will say, like, again, given the time, I will say real-time monitoring and consumer centricity.
Yeah, I would say gatekeeping, right? It's an ecosystem responsibility. Insurer needs to make sure